Hello everyone, I am Dr. MJ Sindil Kumar. In this video, I am going to share about the factors affecting working capital decision and important concept regarding the working capital. We are all know that finance is the lifeblood of the business. Every business activities depends upon the business finance. So the managing the finance is an important task for the every financial manager. The company need the finance for the two purpose. One is called as long-term purpose and another one is called as short-term purpose. The long-term purpose of the company is called as capital budgeting decision. The short-term purpose of the financial needs are called as the working capital decisions. The working capital is nothing but the money needed to meet the day-to-day operation of the business activities. Every business needs the finance to maintain its business in a smooth manner. For example, if the business is belonging to the trading concern or manufacturing concerns, they need the raw material. For purchasing the raw material, they have to need the money. Likewise, for the payment of salaries to their employee and maintaining the employee, they need the finance. Likewise, they need the money to carry out the business activities without any interruptions. For example, for the for acquiring the power supply, they have to pay some electricity charges. For acquiring the land, they pay the rent to the landlord. Likewise, so many expenses are incurred in day-to-day business operation of the business unit. For this, the business should maintain adequate fund. That fund is called as the working capital of the company. It means that the money used to run the routine activities of the business to ensure that the business is going in a proper manner. Working capital is also defined as excess of current asset over the current liabilities. There are two important elements is there. One is called as current asset and another one is called as current liabilities. In other words, it is the ability of the business unit to meet its short-term applications of the business without any interruptions. There are so many numbers are there affecting the day-to-day business activities. For example, for purchasing the raw material, to pay the salary, to pay the bank interest, and you have to meet some other daily business formalities. For this, the business unit must need the finance. That financial requirement is called as the working capital. Generally, the working capitals are classified into two categories. One is called as cross working capital and another one is called as the net working capital. Cross working capital is nothing but the amount we have to invested in the various current assets, whereas the net working capital means the difference between the current asset and the current liabilities. So the working capital is consist of two important elements, namely current asset and another one is called the current liabilities. What is current asset? Current asset is nothing but the asset which can be converted into cash very quickly. Generally, we have to convert the asset into cash within the 1 year. It is very, very important to run the day-to-day business activities. Time-wise, the current liability means it is the obligation or it is the liability of the firm or company pay the amount borrowed within the 1 year. It is called as the short-term liability of the business unit. You have to repayment within the short period of the time. So now we move on to the next topic, components of the current asset and current liabilities. The current asset include cash and bank balance. The how much amount the company maintain the cash in this business units is also important current asset. Likewise, some of the business unit instead of maintaining the cash in the company, they deposit huge amount or deposit some amount in the bank. So it include cash and bank balance. Some others are also told that the cash and bank balance include not only the cash, it also include cash and cash equivalents. The cash and cash equivalents means check, demand draft, bills also comes under the nearly cash and cash equivalent. The next one is called as the debtors. When the company sold the goods to their customers on credit, the sundry debtors are raised. The sundry debtors are nothing but they have to pay amount to the companies. That is, the companies having the rights to receive the amount from the persons by the way of making the credit sales. They are called as sundry debtors. Sometimes the sundry debtors giving the written consent amount, mentioning in the amount, pay within a shorter period. That written document is called as the bills receivables. The bills receivable is nothing but acknowledging the debts. And next one is called as the short-term investment. The company make some ideal amount to the short-term investment in the money market instruments. But only one condition is that investment into converted into cash or converted into liquidity within the 1 year. The company invest their ideal money in money market instrument or any short-term deposit in bank or any other financial institution. The next one is called as inventory. Inventory is nothing but stock. Every company, it may be a manufacturing company or it may be a trading company, it should maintain the stock. The stock may be a finished goods, raw material, or work in progress. Moreover, the lubricants, loose tools also comes under the inventory. The company's business activities always depends upon the inventory. Without the inventories, there is no selling or no manufacturing process. So the company should having a closer monitor about the inventories of the goods. Next one is called as the prepaid expenses. Sometimes the company make the payment before the expenses are occurred. It is called as prepaid expenses. Prepaid expenses nothing but the expenses paid in advance. Now we going to see about the current liabilities. That is the components of the current liabilities. The first one is called as sundry creditors or total creditors. How we sell the goods to the customer on credit. Likewise, the company buy the goods from the supplier on credit. If the customers or if the sellers if the company purchase the goods on credit basis, the sundry creditors are raised. The sundry creditors are nothing but the suppliers of the company. It is the company's responsibilities to pay the amount to the supplier in time. The next one is called as bills payable. The bills payable is nothing but if the creditors giving the credit period, they require any written document at the time the company write the acknowledging their credit in the paper is called as bills payable. Next one is called as outstanding expenses. Likewise, some expenses are occurred, but the company is not pay the cash immediately. That expenses is called as outstanding expenses. Likewise, the company borrow any amount from the financial institution or bank or friends and relativities, and that amount should be paid within a shorter period, within less than 1 year. It is called as short-term loans. It is also the important elements of the current liabilities. Likewise, the company is also having the overdraft facilities from the bank. The overdraft facilities is nothing but withdraw the excess amount what we have already deposited in the bank. The excess amount withdrawn from the deposit amount is called as bank overdraft. It is also used as one of the current liability. Sometimes the company received the advance amount from their customers for executing that orders. That is also called as the current liabilities. Now we move on to the important concept, that is the factors influencing the working capital requirement of the business. The first one is called as the nature of the business. The first and foremost business factors affecting the working capital of business is called as nature of the business. Based on the nature of the business, the companies are classified into manufacturing company, industry, or trading company. The industrial and manufacturing companies require the huge amount of working capital because it taking the longer period to convert their raw material into finished goods, and the continuous production is carrying out it. For that, they maintain huge amount of working capital to maintain their inventories and to pay the salaries to the workers. In the case of public utility service or trading concerns, require the lower amount of working capital because Their work is only buy and sells. So they have to buy the goods and they have to sell the goods. Routinely, they receive the amount. At the time, they require only limited amount of working capital in their inventories. Likewise, the scale of operation. Based on the scale of operation, business activities are classified into two categories, namely large scale industry and small scale industry. Generally, large-scale industries are requires a huge amount of working capital compared with the small-scale operations. Next one is called as growth and expansion. The firm growth and expansion policies also affect the working capital requirement. If the company is a growing and expansion company, requires a huge amount of working capital to meet out this growth and expansion. But the company is a stable and ideal company, they are not required the huge amount of working capital for their development. The next one is called as the manufacturing process time. Some companies manufacturing process time is a huge one. If you're taking the examples of the automobile industries, cement industries, and iron steel company, their manufacturing process is huge one compared with the hotel industries or consumer product industries. If the company's manufacturing process involve a large amount, including the huge dates, the working capital requirement is also high. For example, if the manufacturing process begins the purchasing of the raw material and converting the raw material into the finished goods. For converting the raw material into finished goods, the business require huge time. That company requires a more amount of working capital to maintain raw material, work in progress, and finished goods. Whereas the company is a working manufacturing process a limited one. For example, hotel industries or consumer bakery industries, that industries is having the only the limited amount of working capital because they're manufacturing the product within a day. Next one is called as the operating cycle. Operating the cycle is nothing but converting the raw material into cash. That is, you have to purchasing the raw material put into process and manufacturing as a finished goods, and you have to sell it. And once again, you have to purchase the raw material. That is called as the operating cycle. That is the convert input into the cash. If the company's operating cycle is very low, the working capital requirement is also low. But the operating cycle is a huger one, that a longer operating cycle require the huge amount of working capital. That next one is called as production policies. The production policies depends upon the two categories, namely how the manufacturing process is carried out, whether the company is using technology or machineries for their production. That company is called as capital intensive industry. On the other side, whether the company use the labor for their productions is called as labor intensive industry. So the industries is classified into two categories, labor intensive industry and capital intensive industry. If our company is belonging to the labor intensive industry, we need more working capital to maintain the labor. Whereas our company belonging to the capital intensive industry require the smaller amount of working capital compared with the labor intensive, because that capital intensive industry require huge capital fund than the working capital amount and rapidity of the turnover. Some of the industry is a frequent seller and some industry is a slow sellers. For example, if you're taking the example about cracker industries, the cracker industry is manufacturing the goods throughout the year, but sell the goods only during the Diwali seasons. That industry is require huge amount of working capital. However, when we're taking about consumer goods, in the consumer goods, the frequency of the turnover is rapid one. Here, continuously the sales are taken places. At the time, they need for the low amount of working capital. In simple, if the turnover is a frequent one, that company require lesser amount of working capital. Whereas the turnover amount is very limited, that company is require the huge amount of working capital. And next one is called as the credit policy. Sometimes companies follows the liberal credit policies. Liberal credit policies means the period of credit allowed to their customers. Some companies follow the liberal credit policies, providing more than 60 days of credit policies. At the time, the company requires the huge amount of working capital, whereas the company maintain no credit policy and strict credit policy. They require limited amount of working capital. Next one is called as the dividend policy. The dividend policies of the company is also affecting the working capital because the company pay the dividend in the form of cash only. For paying the dividend, the company requires the huge amount of working capital. If the company maintain the liberal and more dividend policy, the company require more amount of working capital. Whereas strict and stable dividend policy, it having about only the limited amount of working capital. The next one is called as the profit level. The profit level of the company is also deciding the working capital requirement of the company. If the company generate huge amount of profit, it generate internal funds. At the time, there is no need for maintaining the more amount of working capital. But the profit level is very low. At the time, the level of the working capital is also higher one. These are the important factors affecting the working capital requirement of the business unit. In our mind, one of the question is asked that if there is any standard and ideal form of the working capital. To answer to the question is very, very difficult. There is no standard form or ideal form for the working capital. The working capital requirement is affected by so many reasons. As a financial manager, you must think various factors and maintain the adequate working capital. If the firm maintain the excess working capital, it leads to capital loss because you have to pay interest for their capital. On the other side, if the company is not maintaining the adequate capital or inadequate working capital, leads to affect our production policies of the companies because the working capital lags directly affect the productions. It affect the inventory level, it affect the labor maintenance, etc. It straightly affect our production policies of the companies. So maintaining the adequate working capital is very, very important for the any financial manager. So that only they mentioned that it is called as the pulse of the operational health of the companies. As a financial manager, you must maintain the adequate working capital. For this, you understand the various factors affecting the working capital requirement of the company. Thank you.